Good evening, everyone. I have about a dozen slides to take you through here to let you know about the results of this year's required annual external audit that we performed for the school district for the fiscal year that ended June 30th of 2024. I don't know where I point this at to change the slide. Oh, there it is. Okay. Wait a minute. Okay, thank you. So basically, over the next few minutes, we'll just talk about some required communications that an auditor is required to provide their client. And then we'll focus most of my presentation on the results of the school district's general fund. That's the fund that the voters vote upon each spring for your operations. We'll go over revenues, we'll go over expenditures, and then most importantly, we'll talk about the fund balance. And then we'll talk about there are some other funds for the district, and we'll talk about some of your debt service requirements on your borrowed monies. So to start off with, as your auditor, there are certain communications that we are required to provide to you. And so certain of those things are what are your responsibilities as relates to the financial statements and the audit that we do each year. So your responsibilities include, making sure that you select the appropriate accounting policies, that your financial statements that we put together for you, but that are generated from your books and your Office of Finance, are done in accordance with U.S. generally accepted accounting principles. You have to make sure that you have proper internal controls over your financial reporting. If your systems that are in place to process payroll, to process claims payments, if those have flaws in them, then the numbers that they generate, may not be appropriate. You have obviously numerous financial laws, regulations, contractual agreements to comply with, whether at a federal level, state level, and so forth. You do have to provide us all the financial records that we require as part of the audit to look at, and of course, as a board, to set the proper tone at the top. Our responsibilities are primarily to issue an independent auditor's report. So even though we do the whole financial statement on behalf of the district, which is about 80 or 90 pages long, the only part that really belongs to us is the independent auditor's report at the very beginning of the report. The good news is in that report we've issued what's known as an unmodified opinion or a clean opinion. That's the highest form of assurance that we can provide a client. It basically says that we believe the financial statements fairly present what happened in the district for that year. We also issue what's known as a yellow book report on controls and compliance. That was also a clean opinion. And then because you expended over $750,000 in federal aid this year, we also had to do a federal compliance audit in accordance with federal guidelines and issue an opinion on the programs that we looked at, your federal programs. And I want to say that was also a clean opinion. We also go over and issue you a report on your extra classroom activities, primarily all the high school clubs that exist in the district. And then we issue you what's known as a communications letter or a management letter at the end, highlighting any deficiencies that we might have found. We are also required to communicate to you if we come across any fraud or illegal acts. There were none that we noted, of course, during the audit. We didn't have any difficulties. John Chow, the rest of the finance crew here is really top-notch and does a great job in getting us what we need. We didn't find any, corrections to the numbers, that we had to do. The timeline for this audit actually went back to, late spring. We started some preliminary work in June. The main audit was on site here in the middle of August. Getting all the numbers from John's team and going through those numbers. Then there's kind of a delay from New York State. They don't provide the pension information that we need in a timely manner. They didn't put it out till the Friday before Labor Day, and then all hell breaks loose once we get that information. Then we get rolling to finish it. We completed the the financials, as you can see, around September 20th, and we had the meeting last week where we went over this in detail with the audit committee. So now, here are the numbers. This is very high level. There's much more detail in the actual, full audit report. You had estimated in the first two columns, the original budget is what the voters approved back in the spring of 2023 for the 23-24 year. Then during the year, sometimes there are revisions that John asked you to make to the budget as the year goes along. But you could see that the revenue estimate stayed the same in both budget, original and revised budget, just under 58 million. And the good news is your actual revenues came in at just over 59 million for a variance of about 1.2 million positive. On the spending side, the operating expenditures were originally estimated at just over $59 million. Your spending actually in the third column came in at just over 56 million. There are certain purchase orders that weren't completed by the end of the year. Those roll over into your current year. So you did underspend the budget in the variance column there by just under $2 million. You had savings of $2 million. So when you come down to the bottom of the original and final budget columns, you see like a negative 1.6 million. So when you adopted the budget and the voters approved the budget, you actually expected to spend about 1.6 million more than you were going to take in. Some of it was from prior year encumbrances. Some of it was from what you gave back in property tax relief. To not raise taxes, more, you used your savings account, your fund balance to balance your spending plan for the year. The really good news is that like I said, in the final budget, you expected to have your fund balance decrease, your savings account decrease by 1.6 million. Not only did it not decrease by 1.6 million, but in the third column there, you actually see that you added about 2.4 million to your fund balance. So from a budget perspective, the final number in the variance column of 3.3 million means you did 3.3 million better than your plan. If everything came out according to plan, revenues came in according to plan, expenses came in according to plan, your fund balance would have gone down 1.6, but instead it went up 2.4, net of encumbrances of 800,000. So the 2.4 gets added to your opening fund balance, I can call it your savings account, of 11.6 million, and you end the year with $14 million. That's a key number that we will come up to on a future slide here. So just taking a little deeper dive into the revenues for the district, these few lines basically account for almost 100% of the overall revenues for the district's general fund. So obviously property taxes is the primary revenue source for this school district, as it is for most districts in Westchester County. And under New York State law, real property tax law, the town of Mount Pleasant is responsible for the collection, the billing, and the collection of the taxes, and whether the town collects the money from not, you get all your money. And then it's on them to collect from anybody who didn't pay their taxes. So you budgeted and got $38 million. There's also money that comes from New York State that goes as credits on certain homeowners' property tax bills to help them with their school tax payments, and you got $2 million of your property tax collections from New York State. The third number is the sales tax distribution from Westchester County. All the school districts and the municipalities in the county, Westchester and everybody agreed to a sharing sort of all the sales tax money that Westchester County collects, and it gets distributed every quarter to everyone. It's based on the 2020 census, and the ratio will stay the same until the next census in 2030. So this, you had estimated about 950,000. It came in just over $1 million, slightly more than the amount last year, just based on normal sales tax growth. This district does get a lot of money from tuition that they charge for out-of-district students who attend the district. You had expected about 4.4. It came in about 3.9, so it did come in a little short of expectations, but still higher than the amount from the previous year. And then state aid, you did very well on. You estimated about 12 million. There's a whole bunch of categories of state aid that make that up. And it came in at about 12.7 million. So you did 700,000 better than you expected on that area. Just to give you a little historical perspective on these revenues, obviously, as I said, the property tax and the STAR from New York State this year totaled about $40.1 million. It was $39.2 in the previous year, $38.5 2 years ago. So again, that's basically, increases under, the normal tax cap type increases in those revenues. And you also have had some nice increases in state aid in the 2 years. You went up almost $4 million in state aid. Some of that is the state finally fully funding the foundation aid formula. That's a mouthful. And some of it is just, you've taken on some debt service, you get some additional building aid and things like that. On the expenditure side of the equation, what do you spend those resources on? Again, this is a very high-level view of the spending. Obviously, your budget is much more detailed. You have hundreds of lines of expense codes in the budget, but this summarizes them at a very top level. So operation of plant is basically like buildings and grounds type costs. You could see, you did have some savings when you look at actual compared to budget, but there is a large amount of encumbrances. That's typical at most schools. Those are purchase orders that are part of the 23-24 year, but generally this work is done over the summer before the next school year starts. So the purchase orders and things are encumbered and then expended out over the summer. Teaching regular school is your main teaching code for the regular public education. It's teacher salaries and so forth and all classroom related costs. So again, coming in about $14.2 million this year, and you could see last year about $13.6. So again, it's normal contractual salary increases for teachers, step increases, and so forth. Programs for students with disabilities, this is your special ed costs for the district, and you could see it came in about $8.9 million this year. Last year was about $8.1 million. For every district, this is generally a growing expense each year. Transportation, to run the bus program for the district, those costs stayed pretty consistent year over year at about $883,000. Teachers' retirement system, so this is your contribution to the teacher's pension plan. The rates are set by the teacher's retirement system. They actually lowered the rate slightly this year compared to last year. So that's why you see that your cost this year is slightly down. It doesn't go down as much as the rate went down because obviously you have additional salaries, salary increases, and so forth. But it did drop slightly. Social Security is your share of FICA that you have to pay, the employer share of FICA again, up slightly from last year again based on salaries and the increase in the Social Security rates. And then health insurance, what you provide your employees for health benefits. Obviously a growing cost every year, $7.9 million this year versus $7.2 million, basically almost 8, 9, 10%, which seems to be every year. So again, a 3-year look at those same categories. And one of the things I would point out here was it was $35 million total 2 years ago. You see it jumped to $39 million, but if you look at the very last line in there, the transfer out to special aid and capital, you see a spike in that number between 22, 23, and 24, and that was a planned use of fund balance where you moved a large chunk of money over to the capital projects fund to do planned capital improvements. So that was like a one-time spike. So if you kind of take $2 million off of the 23 column, you're at about $37 million. So it's kind of very consistent, like 35, 37, 39. It's just normal kind of growth at a 2-3% clip. So as I said, I think this is probably the most important slide of my dozen or so slides. And the bottom number in the 24 column is the number we saw on the other side that I said we'll talk about this number, that $14 million number. That's your fund balance. That's kind of like your new savings account number to start the new school year, up from $11.6 million in the prior year. But fund balance, as you can see, is broken down here into numerous categories, and almost 2/3 of it is in the first category called restricted, $9.6 million total this year. All these restrictions are established under general municipal law or education law, but none of these can exist without board approval. So all of these over time have gotten board approval. John would come to you and ask you to, hey, let's add some more to this, let's pull some money from this, and so forth. But all of them are under the umbrella of what's allowed under the law. So in the 9.6 million, you have 2.7 million set aside for tax certiorari claims. So these are refunds from businesses, homeowners who contest their assessment on their property, try to get their property taxes lowered. So you have a bucket here that's set up so when you do get a claim to pay, you pull money from here and don't have to tax again to make that payment. Employee benefit accrued liability is basically vacation and sick time, essentially, that would be owed employees upon their departure from the district. So again, if you had a number of retirements or whatever in a given year, you would pull money from this pot and use that to pay those obligations. Then you have money set aside for the employees' retirement system, ERS. Can only be used to pay that bill that you get every year for non-certified staff members, so all the, basically the non-teachers in the district. Then you also have 1.5 million set aside for the teachers' retirement system. So again, that's there in case, right now rates are just under 10%. So, every dollar that you pay a teacher, 10 cents you're paying to the state retirement system for them. Those rates have been as high as 20%, within the last year. So imagine having to budget double what you budget for teachers' retirement right now. So again, should the rates go up, which generally happens if the stock market goes down and they need to replenish their pot, they'll ask you for more money. So this would be a pot where you could draw money from and not have to increase taxes to pay any increase in that bill. You have some money for liability claims, related to like insurance, things that you would have to, self-insure for that wouldn't be covered. And then you've also set aside money in a future capital projects, a reserve that was approved by the voters at some point in time that I don't recall, 2 years ago. So you put money in there, there's a cap on that of how much can be put in there, and then when it's time to spend from it, you will also need voter approval to take money out of that one. So that one is the most restrictive of the restrictions. So that's 9.6 million. You have those purchase orders or encumbrances that I mentioned of 800,000 that will go to amend your budget that you're in now so you could finish paying those bills that kind of got started last year. Then you gave back the same amount as last year, 1.1 million in tax relief for the 24-25 school year. So when you adopted your budget and the voters approved the budget for 24-25, you anticipate spending more than what you're going to take in. You said, well, we have savings and we'll use that to balance our plan. So what that left you with is 2.4 million in what's known as unassigned fund balance. So out of the whole 14 million, really only 2.4 is truly like free and clear. That number represents approximately 4% of your budget, 24-25 budget. That's the maximum amount that a school district in New York can have in that portion of fund balance. So you are at the max for that, which means you've done very well in managing the finances for the district. So just to wrap things up, there are some other funds of the district which are all important, but obviously not as important as the general fund. Primarily the first one, the capital projects fund, so that's where money is used either from what you've transferred, like we saw a year ago from the general fund to do capital projects, or when you go out to bond like a big project and you borrow money. So that fund, you spent some of the money that was in there from last year, and you have still about $2.5 million in there for what's there right now. Obviously, you'll have other stuff forthcoming in the future. You have a debt service fund that has $2.5 million now. That fund can only be used to help offset your debt payments that you have on all your borrowed money for principal and interest. So this would help offset some of that in the future. You have a school lunch fund for the operation, obviously, of the lunch program. And basically, the revenues and expenses pretty much were equal this year, and fund balance didn't change too much. And then special purpose funds, kind of just this catch-all fund. It primarily represents the extra classroom activity balances, all the ins and outs of all the student clubs. primarily at the high school. And then lastly, the district's debt service obligation. So as of the current time, the district has on the top part of this chart, you have 5 bonds that you had borrowed over the last decade or so that were originally issued for that you would have to pay back $53 million plus interest. The balance outstanding, principal outstanding at this point in time is $40 million that you owe back to bondholders. And then on the bottom of the chart, it shows you what that obligation is each year for the next 5 years, and then 5-year increments, along with the interest associated with those payments. So like in 2025, you have a total of about $4.7 million that would be owed back. As a percentage of your budget, it's very much in line with other districts in Westchester. Most districts don't just have 1 or 2% of their budget in debt service, nor do they have 15% of their budget in debt service. So you're kind of in that 5-6%, I think, range, give or take. So that's pretty normal for most districts in Westchester. And so with that is everything I had. I'd be glad to take any questions you have.
Any questions?
Thank you, Scott. One question, maybe a follow-up, depending on the answer. On page 6 of your spreadsheet, could you explain again what the school tax relief reimbursement is in the revenue?
Sure. So years ago, I think it was probably in the late 90s, they came up with, I forgot who the governor was at the time. It might have been Pataki. I could be wrong, but it was in the late 90s, where they wanted to provide the state wanted to provide some kind of property tax relief for school taxes. So what originally started was the state would essentially give the school district the money, like kind of pay a portion of everybody's property tax. So if you had a $5,000 school tax bill, the state would pay $500 of it, and the homeowner would pay $4,500. And so you got $4,500 from the homeowner and $500 from the state. And it kind of stayed that way for a while. And then the program got too expensive for New York State. So then, years ago, they started putting limitations on it. So first they put income limitations on it, I think. So if you made, your house made over $500,000, you didn't get STAR at all. So that was one thing that started reducing it. So what that caused was a shift, because you still wanted your $5,000 in tax on that house, but now instead of the homeowner paying $4,500 and the state paying $500, now the homeowner in that case paid $5,000, right? They weren't eligible under the new arrangement. Then they made further changes, I think in the last year or two, where now if you are a new homeowner, you bought my house, even though I got the STAR credit right on my tax bill. So when I got my tax bill for $5,000, it had the STAR credit on it, so I only had to pay $4,500. Now under this program, new homeowners would have to pay the $5,000, and then they would get a check from the state for $500. So you still got your $5,000 as the school, but now you weren't getting the $500 in STAR from the state. The homeowner got it, but they had to pay the full thing, and again with the income limits and other limits that they put on. So what we're seeing is that this number for the STAR seems to be dropping, either because people don't qualify under the income limits anymore, or as houses turn over and are sold, now the new people are getting it directly if they qualify and have to pay the full thing. So I think over time, this may go to zero, that you're getting directly, and the homeowner's going to get 100%. That's my sort of understanding of it.
Yeah, because that was consistent with mine, and I was just curious, because I thought this had been sort of phased out effectively.
I don't know if it's
still
phased
around
out.
it's
Certainly
not cleared off the rolls.
Yeah, it didn't used to have an income limit, and now it does. So if you're over the limit, you don't get it.
Yeah,
But
for some reason I thought
they are not
you
really
could apply,
phasing it
3 or
out.
4 years.
They're really not phasing it out. It's just that where it's coming from.
Yeah, but phasing it out as far as a reimbursement to us. Now it's going to be a reimbursement to the homeowner directly from the state.
Correct.
But there's a but. if you have to look at the two lines together. If you combine the two lines, that's our entire tax warrant. Whether it's going to be coming from the property taxes from the towns or coming from the state, we're going to be made whole. That's the reality. And you will see this number, Scott is right, the star number is going to decrease. The reason is because all the new homeowners, they get the check directly from the state. So, as more and more transactions happen, there'll be more people going that direction. But the state output that they have to pay out is still the same, because that 500,000 limit for taxable income per household has been in place for quite some time.
Right, so I mean, we're not getting less money, it's just, it's going to change from one line item to another.
That's right.
Correct.
That's right. We get exactly the same amount. So if you combine the two numbers, that's the tax warrant that you approve in July.
Thank you.
Good question. Any other questions?
No question, just a comment that thank you for the process this year. I thought it gave us, it was timely. It was very much appreciated, all the hard work that went into it. Thank you.
Yeah.
Thank you.
That's what I was going to say. Thank you so much, Scott. And a big thank you to our business office and all of the hard work that goes into getting such a clean audit. I know it's a lot of work, so thank you. And congratulations.
It's a lot of summer work, a lot of work in the summer.
Exactly.
Have a good evening.
Thank you.